All right, everybody, welcome to the Tuesday live stream. Today we're going to do a little bit something different because it's kind of important. There is a new form that the IRS has not just rolled out, but has put out for 2025, the 1099-DA. And I have two gentlemen here to help answer any questions that you may have. I've got David Kemmerer. David is the founder and CEO of CoinLedger. David, thanks for stopping by. How you doing?
I'm doing good. We're halfway through August and approaching the extension deadline. So all is well here. A little bit quieter time of the year for us.
The extension. And then, of course, we also have Andrew Gordon, which I unceremoniously took a lot of his information from his blog post and put a video just recently. So these two gentlemen are here to help us out. Andrew, how are you doing? Are you getting a lot of inquiries these days, especially with the crypto tax laws?
Yeah, doing well. This is typically a pretty slow time of the year, as David mentioned. As we lead into the tax deadline, things certainly heat up. But what we've seen over the last few months is the IRS has been sending out thousands, potentially tens of thousands of notices. So we've been getting a lot of people reaching out to us. I think it's just a taste of what's to come, especially with the 1099-DA reporting, which I know we'll be talking about today.
Yeah, exactly. So if everybody's confused about what is this, what is going on, what's the new thing with the IRS, we did a video just like 3 or 4 days ago, and it's all about the 1099, which is in effect for 2025. There is a link in the description to that video. And so far, it's I was surprised at how many people were watching. It was almost at 40,000 views 4 days ago. I think there's a lot of people who may have, I'm not going to say didn't actually file their taxes, but may have fudged the numbers. So just as a little recap, and Andrew, David, you guys are welcome to correct me. But for the old form that the exchanges were sent out, you had a 1099-K or a 1099 MISC. And essentially what the exchanges were doing was telling the IRS, like, look, Rob here, he bought a lot of Bitcoin, but we're not going to tell you the entry and exit point. We're not going to tell you a whole lot of information. It's pretty much just the base of like, this is how much he spent. We're not going to tell you unrealized profits, unrealized losses. We're just going to pretty much tell you that. And then now comes the 1099-DA, which is saying, okay, here's the unrealized losses. Here's the unrealized profits. This is how much he spent. This is how much would be unrealized gains, unrealized losses, and so on and so forth. So essentially, the exchanges have become big brother, and they are reporting on every single one of you. And this goes into effect. It's in effect for 2025. But there's a problem because as everything gets linked, and I think the IRS becomes a little bit more tech savvy, they start to look back at some of these numbers and go, wait, where did Rob get a half of Bitcoin 4 years ago from this random wallet and another exchange that we've never even, this doesn't make any sense. Let's just roll Rob in here. So that's what scares the hell out of me. Andrew, David, who wants to take this one? Am I far off, or is there something you guys want to add?
I'll take it first, I guess.
Yeah.
As you've mentioned, 1099-DA reporting is occurring, issuing the forms in 2026 for tax year 2025. For a lot of people, that means that 2025, they're going to have to be reporting crypto for the first time. And if they don't, well, the IRS has essentially a fire hose of information. They're going to be reporting for you, sending penalties, audits, you name it, expect it. But the bigger issue, I think, for a lot of the people watching is that your activity didn't start in 2025. It wasn't your first year. You might have been trading years earlier. And what that means is you have cost basis. You acquired crypto at earlier dates, at earlier prices, and that information needs to be carried on to your 2025 tax return and future years as you sell. That creates several problems. One of them being that you actually need to get that information of what that cost basis is. And tools like CoinLedger are certainly very effective in doing so. But the other problem is that if you don't amend your tax returns, or if you've not reported that crypto on your tax returns in the past, there's a strong potential that the IRS sees the reporting in 25 logically, or their computers logically think, well, you reported 1 year, you obviously had crypto in the earlier years, likely trading, didn't report it, now at a high risk for audit. So 2025, while it may be for some people the first year that they're going to be essentially forced to report, it's a time that you should look back at earlier years, use tools or a professional, reconcile, file any amendments as appropriate.
Well said. David, anything to add on that one? Just to come back to it.
No, I think, you know, the 1099 stuff has been in the aura for the past 3 years, and just this is the year that it's going live. So January 2026, your crypto exchanges will be sending, you know, a tax form to you and an identical copy with the IRS that's detailing what you sold on that exchange. And so, you know, this is an enforcement mechanism that the IRS can use to, you know, crack down on who has crypto income that they should be reporting, and do we see that reported on their tax return. And so, of course, there's going to be a lot of hairy problems that stem from this fact. And so platforms like CoinLedger are built to help with those problems.
Good. These are going to be a problem. I see this as a major headache coming up, because it's not like the IRS is perfect. It's not like we're perfect. I think there's going to be a lot of give and take. And I think there's going to have to be a lot of, well, this was in good faith and I tried my best, but here we are. And I think if we can, and actually that give my first question, which I got a lot of, which was, what if we screw up? What if when we put this data in, this information, and we try our best and it comes back and like something's just, it's going to be wrong. I mean, for a good amount of people, I think. How does that play into the good faith with the IRS? Andrew, could you start with that one? Leave on David.
Yeah, well, to begin, always a great idea to do the best that you can. Use the tools that are available, get as much of the information that you can. What we're seeing is that the IRS is largely targeting or auditing people that have not reported at all, have not given it a good faith basis, have maybe reported their US exchanges, but, you know, left off all their decentralized wallets, right? And so there's a very big difference between including all of those different sources, using a tool like CoinLedger and doing your absolute best. And maybe there's a few discrepancies versus, you know, just using your Coinbase report, although you had 10 other exchanges and wallets, and call it a day. So definitely makes sense to do your best. And if it is very complex, use a professional, use a firm like ours. For many people, it's a cost of business. Crypto trading is essentially a business for many, and they've earned a living as a result. And just like if you had any other conventional business, you would be paying an accountant or a bookkeeper to do your books. And so if it gets complex, maybe your time is spent better elsewhere, or maybe it's just too complex for you to do so. At that point, tag in a professional. But you can't just say, hey, you know, too complex, and I want to ignore this.
Yeah, well said. Yeah, exactly. I don't want to ignore this. David, anything to add with that one as far as like good faith? And have any of your clients or customers reach out to you and said, hey, we're getting, you know, the IRS reached out to us, but we're doing something with them? Good faith.
Yeah, it's all the time, and it's not like the most satisfying answer, but you could consult your tax professional, you know, if you have a deep question on that. CoinLedger is never going to be a platform that forces you into doing things exactly like this, and we're not going to let you build tax reports if you don't have every single piece of data. We're a tool that's going to make this problem as easy and simple as possible for you, but it's still on you to make sure you're doing things you know, in the correct way. And I mean that in like CoinLedger supports all the correct rules, but just like TurboTax, you could use it incorrectly. You can use CoinLedger incorrectly, and we're not going to stop you from doing that. We're a tool that's going to make your life easier. But on that type of question, consult someone like Andrew, consult someone who's a professional, and they can advise you on, hey, we did our best faith effort on getting all your transaction data from this exchange.
Yeah, we did our best and we froze. So anyhow, so Whee! Sorry about that. What happened there? I dropped off for a bit.
Oh, hey, glad you're back.
Oh my God. Okay, so the last thing that we left off was we talked about safe harbor, essentially getting through there and going, okay, well, I did my best and moving from there. I did get a bunch of questions coming in. First of all, before we move on, I know some people have been asking me like, well, this kind of seems a little bit overwhelming, especially with what's happening. I'm not for sure that my CPA, or if I even have one or don't have one, is actually right for the job. So I will just say that there's a link in the description for Gordon Law. Check that out. And I know that Andrew is a little bit busy, but there is room. Now, there's also two things over on CoinLedger. There's what we talked about in the video from 4 days ago was, first of which, if you are so inclined, I highly recommend to do a portfolio tracker, which is 100% free over a CoinLedger. And it gets you used to putting in and using like your public addresses so you can track your gains and losses. And then when you want to actually do any kind of tax work, you can throw up the tax report and send it over to your CPA. Also, on top of this, if you scroll all the way down on the website at CoinLedger, links in the description, there's a little link here. It says find a crypto tax expert, and there's a ton of them. Jordan's there, Andrew's there, Matthew, Jawa, Drew, Ryan, and a whole plethora of different people that you can reach out to and get a lot of help, because I know things might be a little bit stressful right now. So sorry about the little Wi-Fi issue. Let's get into the big questions. So this is a good one. What in the tax jail time are we talking about here? I'm honest, and CoinLedger has worked for me the last few years. I'm honest, so thanks for making crypto easier, guys. Love the TurboTax integration. As far as like jail time, Andrew, take this one, like, because I mean, we're not a bunch of we're not like Wesley Snipes or Willie Nelson out here, just trying to avoid tax as much as possible. Let's just say that we goof up a little bit. Are we talking jail time for like anything, or is it kind of like few and far between?
Yeah, so I was previously the lead counsel for John McAfee, right. One of the great early crypto pioneers, and he was unfortunately charged with tax crimes, charges related to not reporting crypto-related tax income. Unfortunately, we weren't able to bring those charges to trial. He passed before he was extradited to the U.S., but this was a very extreme example of U.S. tax enforcement against crypto non-reporting. And his example isn't the only one. There have since been other charges filed against other people for not reporting crypto. Mm-hmm. So that said, things could be quite extreme. And what kind of jail time are we looking at? In the order of years. For each year you didn't report or pay taxes. That said, this is a very extreme case. Most of the individuals that we work with that are being audited are facing civil penalties. In order for it to be criminal, facing actual criminal prosecution or threats of jail time, usually there needs to be fraud involved and evidence of fraud. Otherwise, we're typically talking about penalties, accuracy penalties. Even if there was fraudulent representations in an audit, usually you're only talking about penalties, not necessarily criminal charges. But there's a very big difference between not reporting crypto at all on your tax returns and you have millions or hundreds of thousands of dollars of income. If that's the case, if you got hundreds of thousands or millions in crypto capital gains and you haven't reported, give us a call. There's little advice that I can give you other than give us a call and we'll help you through it. But if you've done your best to report, you've used tools and maybe you're audited and the IRS finds some adjustments, typically you're talking about penalties.
Got it. Well said. Dave, this one's for you. And I think this is a pretty good one. What if the exchanges went bankrupt? And we seem to have no shortage of them back in 2022. FTX, Voyager, Celsius, what do we do with those? Because I think some of those are gone and we don't have the information. Or do we still have some information?
Number one is if you're able to reconstruct some of the transaction history, even though you don't have access to everything from the exchange. A lot of times what folks will do is, analyze the inflows and outflows to and from the exchange to, again, make a best faith effort and estimate the taxability, capital gains, losses, income incurred on the exchange. But our hands are also tied. If CoinLedger doesn't have the data, it's not able to generate tax reports off no data. And so those are good circumstances when we do refer people out to our Done For You team, which is our professional team, folks like Andrew, to do that work of, okay, let's reconstruct this. Let's take this best faith effort here. Let's make this assumption here. And again, it's about, putting your best foot forward on that front.
Okay, good one. That's good to know. And then Andrew, before we get to you on the voluntary disclosure program, this would kind of lead me to the next one. What do you do with the many coins that CoinLedger cannot find a cost basis for? I go now all my APIs from exchanges, CoinLedger is missing a ton of it. I've had an issue as well, especially going back because I've been doing this since 2017. So when there's a missing cost basis, I send these forms to my CPA over in Puerto Rico, and she says, okay, well, what do you, we kind of, what David was talking about, let's reconstruct where you think you were, because some of the data we just don't have. And especially, I think it was, it was Celsius, and there was a bunch of things that were missing on Voyager. So we reconstructed from the memory as best as possible, and then we move forward. But what do you tell Andrew in this situation? David, what can you guys help him with over at CoinLedger?
Yeah, for Andrew here, what I would recommend is first navigate to the missing cost basis troubleshooting report on CoinLedger. And what that's going to do is, we actually recently revamped this. It's going to walk you through a 3-step process of how to try to isolate where that missing basis might be stemming from. So yeah, you could click that missing cost basis tab up above. If you click that,
to review,
the one that's up, just
the
right
one that says missing cost basis.
Troubleshoot issue. Yeah,
okay,
there you go. And so follow this troubleshooting flow that just populated. That's step 1. And the other thing is reach out to our support team. They literally work with thousands of people all the time. This is what they specialize in. This is a very, very common problem. I'd say the vast majority of accounts have some type of data discrepancy, and it's because crypto can be transferable. And so something as easy as somebody sending you some amount of Bitcoin 5 years ago is not going to have basis, because you need to properly reconcile and classify what that transaction was, whether it was considered a gift, or it was actually, I paid him cash and he's just sent me the Bitcoin, right? We just see it as a one-sided deposit, debit. And you need to tell CoinLedger, oh no, this was a trade, or this was staking income, this was mining income. And all of those classifications are what determine what the basis of an asset is. So there's many, many reasons why Andrew Harling here could be missing cost basis. So I'd say first, go through that troubleshooting workflow. Second, reach out to our support team who specializes in helping folks with this completely for free. And then 3, if you're still in a world of hurt, reach out to professional services who do this stuff.
Got it. Okay, that makes sense. And then Andrew, I wanted to talk to you about the voluntary disclosure program, because this is one of those things where I think there's going to be some people that says, okay, all right, if you're going to have all the information, I might as well report everything because I did fudge some numbers. But it looks like with this voluntary disclosure program from the IRS, it's where you say look, I may have I didn't fudge some numbers, but there's some things that I need to report. And it looks like you can just kind of go in there and do a good faith type of thing. But there was this story that was sent to me, threat to the IRS voluntary disclosure program, Richard Brazer's legal team appeals conviction to prevent devastating injustice. And I think I wanted to bring this to everybody's attention because we think we can, we talk about, we can do this as far as and again, good faith. But there's some times when stuff like this will happen. This guy, and I'll link this in the description because this was from June 18th. I just got this a couple of days ago. It looks like Richard Braser in the United States versus Richard Braser and Gregory Gettner. It looks like he was prosecuted for, it looks like there may have been some type of fraud. He came to that voluntary disclosure program and said, look, this is what we have. But then it looks like the assistant U.S. attorney, Karen Finley, pressed forward with an indictment. And it's like on technical charges under 26 USC for failing to pay trust fund taxes. So I just wanted to get not your opinion on that, because that's a whole nother story, but how does that work as far as this voluntary disclosure program for the IRS, if we have to go down that road, and who would have to do that?
Yeah, that's a great question. And I'm not familiar with this case exactly, but I am familiar with the voluntary disclosure program overall. We've been helping clients for over 10 years, even unrelated to cryptocurrency, using this program. And it's a way that high risk taxpayers, people that think that there is the chance that the F word, fraud, might come into play in their case. Maybe they purposely tried to conceal certain assets or crypto accounts, or reported certain crypto accounts on their tax returns, previously left the country, whatever it may be. But the F word might be at play. And it's a way for these taxpayers to come forward to the IRS, file amended or original tax returns, pay a penalty. But under the VDP program, the voluntary disclosure program, they get a guarantee, or they're supposed to, of no criminal prosecution. This is fairly rarely used for our clients. Most of our crypto clients were able to file amended tax returns and just use the standard amendment process to come forward. One of the big downsides of the VDP program is it does have a very significant penalty. And I've been talking to people in DC advocating for a crypto-based VDP program. The current VDP program was created largely for people that had Swiss bank accounts and offshore assets to disclose them. Fairly easy to disclose those. Crypto, totally different ball game. And we need a way that people can come forward, disclose, not have a threat of prosecution or audit, something that I'm fighting for, and hopefully that we're able to achieve.
Got it. This is, okay, thank you for that, guys. A question comes up from Plato. What is fudging numbers? This is a term that I've been throwing out about 30 times, I think now. Fudging numbers are essentially because before the 1099 DA, the exchanges didn't have a requirement to report all information to the IRS. They would say that, okay, Mr. Robbie Wolf here, he's bought $20,000 worth of crypto. We're not going to really give you a cost basis or whatnot. So what I could say is, yeah, I bought it at 20,000, or I bought it at 19,000. I sold it 20,000. I just fudge the numbers. I don't really have to tell my cost basis. I can just pretty much make it up, and then I can pay a few, very little bit of taxes. So that's one way. David, Andrew, is there any other way that people that you guys have seen have fudged their numbers? This ought to be good. And we're not giving fudge number advice. We're just saying this is what we see and what maybe you're not supposed to do.
Mm-hmm. Yeah, I know, all the time. Again, like you can choose how you use, and you report your taxes, and you could go into CoinLedger and edit our transaction, which, we pull that you sold something for 100,000, and you could just edit and say $10, right? If you want to. Again, you're committing tax fraud, but you could do that, and that would definitely be a case of fudging the numbers.
Andrew, what else you got? Any other way that you've seen that's been the most creative, and you're like, hey, you can't do this?
Well, the list is endless in terms of creativity and different ways that people do it. But one of the most common ways that I hear people, I guess, so-called fudge the numbers, is to use the Coinbase tax report, because Coinbase tries to make it fairly easy for tax reporting. But the problem is that their universe of reporting is Coinbase. And if you're trading on any other exchange, wallet, any other activity, I often hear from people, well, I reported what Coinbase told me. As they know, they had all their trades elsewhere and all their gains elsewhere. And so it just doesn't work. That's not good enough.
Got it. Hey, this comes from Meme. How much of all of this is new as of January 1st, 2025? I believe this went into effect January 1st, 2025. Is that correct?
So crypto has been taxable very clearly since 2014, I believe, Andrew, when the IRS officially put their flag in the ground. So the taxability is not changing and has not changed. Capital gains are taxable in crypto just like they are in stocks. What is changing is more the behind the scenes accounting of how you have to track and calculate those gains. So pre-Jan 1, 2025, most platforms like CoinLedger and most people using platforms like CoinLedger were using what's known as a universal tracking method, where you're bringing in data from all of your wallets and essentially treating it as if you just traded out of one wallet. Going forward, you need to track every wallet and exchange in a separate queue. So a Bitcoin bought in Coinbase and sold in Coinbase has to be pulled only from your Coinbase wallets. Same with all your other wallets. And so that's what's changing, is just that calculation and the accounting behind these gains and losses.
Gotcha. Follow-up question real quick. And this is what you were just talking about, the wallet-to-wallet basis or universal wallet basis. And if you could give us a breakdown of what that was before.
Yeah, it's exactly what I just mentioned. Jan 1, 2025 going forward in the US, you need to be reporting per wallet or by each wallet. So if you sold an asset in Kraken, you have to pull from a tax lot from Kraken. You can't sell this lot that I'm holding in my Ledger cold wallet, for example. And so pre-2025, I'd say most people were actually reporting that way. And now moving forward, we all need to switch to reporting on each wallet level.
Gotcha. Andrew, before we move on, anything to add with that?
Yeah, no, I think David covered it.
Yeah, pretty much. And then how about this one? This is, of course, the question. How much does Andrew and CoinLedger charge? Andrew has his own separate entity, and I'm sure there's like different levels. But I can tell you for CoinLedger, if you're looking just first of all, for the portfolio tracker is free. For the tax forms, less than 100 transactions, $49, investor 100. And then if you're somebody like me or my friend Bobby, who have over 3,000 transactions, it's $199 plus. On top of that, if you're also looking for I don't want to deal with this, just like what Andrew was talking about, you have to treat this as like a business, because essentially it is. They have, under professional services and pricing, they got reviews done for you and a total tax return prep. So if you don't want to deal with it, just work with those guys. Or if you want to work with Gordon Tax Law, there is a link in the description and you can talk to him and kind of go from there. So that'll take care of this one. Digital asset degen, is CoinLedger hiring customer support? I'm fascinated with working with them in TurboTax. Serious question. I don't know, David, are you guys hiring?
Yeah, customer support always. No, it's seasonal, so we scale it up during the tax season. So reach out and I can get you in touch with the guy who manages our customer support.
Sounds good. Just reach out to CoinLedger. How about this one? What if you never made more than $600 buying and selling crypto in a year? Anything to report there?
I can take that one. Unfortunately, the dollar amount that you buy or sell or your gains or loss is less relevant, at least at this point. And there have been legislative attempts for a de minimis exception, which means that if you buy or you have gains under a certain dollar amount, that you don't need to report no gains or losses. But as of now, every single transaction needs to be reported. Even buying a cup of coffee, that's still with Bitcoin, needs to be reported. A $5 transaction needs to be reported. The IRS is largely concerned with volume of transactions. We've had clients that maybe net to break even after the year. But they've traded 1,000 times, or maybe they've got a $500 gain or loss, but they've traded 10,000 times. So the net effect, unfortunately, you need to be able to show that to the IRS. You've got to be able to prove to the IRS that it's only $500 or gains or loss or whatever it may be. And in order to do that, you need to report all the transactions.
Oh, gotcha. Okay. Well, guys, we're coming up on that time. It's about 5 minutes or so. So we'll slam in some more questions and then get out of here. This is a good one from Dougie. Will I owe the same amount of tax per transaction if I place a limit sell order on an exchange? Meaning I place a limit sell order. Let's say if it doesn't get filled, you don't own anything because it's just a limit sell order. Versus converting my assets to USDC and then cashing out. Well, first I'll take this one. You guys can correct me. For a limit sell order, if you put it in there and it doesn't get sold, you own nothing. If you put a limit sell order and it does get sold, then you owe on taxes from what you bought the asset for to what you sold it for. Now, if you convert your assets to USDC, that is a conversion. So you will owe taxes. Let's say you buy Bitcoin at 10,000, it goes to 118,000. You go to USDC, but it's crypto. You still owe capital gains because you went from one asset to another asset. And of course, cashing out, we know that you're going to pay taxes on those. The only big question you have to ask yourself is this a long-term capital gains or is it short-term capital gains? Meaning, is it more than a year or less than a year? Or did you move to Puerto Rico and you have back 60? One of those three things is correct. So guys, and if you feel free to add anything, or did I miss that?
Yeah, the important thing is, did you dispose of an asset? Because that's when you're triggering the taxable event. So like you said, if that sell order got filled, you disposed, let's say, of Bitcoin, you're realizing gain or loss on that sale. Same with when you converted it to USDC, you're still selling the Bitcoin for USDC, and that you're going to realize gain or loss on, depending what the price of your Bitcoin did since you originally bought it.
Yeah. How about this one? This is a good one from First Coast. What about DeFi and cross-chain? Do we have to report those?
Yep. It's the same dynamic. All crypto activity, if you've incurred income, gain, loss, if you've sold assets, that needs to be reported on your taxes.
Yeah, I gotta say. Okay. What else do we have? Oh, NFTs. What if all of your trades with cryptos are from NFTs? Does this affect how your taxes are processed? You're probably going to have some pretty nice tax loss harvesting. I don't know if those NFTs are blowing up, but I don't think that's true. But David, didn't you guys have a program where they were buying NFTs?
Yeah, it was more of a marketing stunt, but it worked.
Okay.
But we built the NFT tax loss harvester, where we launched a smart contract that would buy your worthless NFTs for like a cent, so that you could realize the losses on them. To be honest, I'd have to check if that's still up and running. It was a while ago.
Yeah.
But the short answer of the question is NFTs are treated very similar to crypto, and buying, selling, trading them, you are going to be incurring gains and losses along the way.
I gotcha. Hey, here's one. I don't think this is from Meme again. I've been moving USD to USDC on Coinbase to get the 4.2. Do I have to report each time I go from USD to, I mean, because it should be $1 to $1. I know there's a little bit of fluctuation, like $1, 1.0009 or something. Do we have to do anything with that? I mean, seriously.
So USD to USDC, you're buying USDC. You haven't disposed of a capital asset in that state. So you haven't incurred a taxable event yet. But earning, in this case, let's call it like staking income or interest income, that 4.2% rewards that Coinbase is dripping to you, that is taxable income. And that, again, CoinLedger is going to import all of that and report it properly for you. But that, as you earn it, those rewards, that's taxable.
Got it. And then here's a follow-up. I think it's the same thing. Master Blaster says, I'm trying to do my tax from 2022, but some of the exchanges I use do not have data. We talked about Celsius, Voyager, FTX, same thing. How to proceed. David answered this again, where it says, you have to you can go in there and try to see what the cost basis is and work through it. And if you can't figure it out, there's options. You can reach out to customer support for CoinLedger. And I think actually just to show again what this is, and of course you can rewind the video, but under the cost basis, let's see, let me go back. If there's a missing cost basis here under transactions, you would click on missing cost basis, troubleshoot the issue, and you go through the steps, kind of verify the balance. If you can't find it, like I can't find it on Celsius and stuff, you work with the person that you have, like a CPA or a lawyer, or if it's just yourself, and try to fill in the cost basis that you can put, that you can remember, and try to do it in good faith. That's pretty much as good as we're going to get, I think, in this situation. All right. Rusty Bot says deny, deny, deny. I don't know if that's a solid strategy, but it is a strategy. Let's see. You're welcome. I think that's it. Actually, we're here at the 35-minute mark. So, guys, if before we take off, any last words of wisdom for everybody that are kind of freaking out? David, I'll start with you and leave it off with Andrew.
No reason to freak out. It's definitely a little bit more complex due to just the fact that we have to report everything, gains and losses, by the wallets that the transactions happen this year. The universal method gives us a little bit easier mechanism of reporting, but it's all manageable. And so I would just say, if you do have questions or you're freaking out, reach out to our customer support via the chat widget on our website. It's completely free. And we have people who do this all day, every day, and they'll be happy to walk through it with you. Yep.
Very well said. Andrew, last words of wisdom for people.
Yeah. Taxes are no fun. I get it. But unfortunately, there's a saying, there's not much in life that's certain other than death and taxes. And that's unfortunately very true. People are often trying to search for yield or gains in their crypto investments, right? That's what we're all trying to do is make money. Taxes can be 30, 40, some states, 50% of your gains. So with tax planning, you can narrow that down using tools like CoinLedger, working with professionals like us. There are ways that you can use the tax code to your advantage at all. But the most important thing is to not ignore taxes. We're seeing that it's on the minds of the government, the IRS. Enforcement is increasing. So get ahead of it. Use the tax code to your advantage. Don't get caught by surprise with an audit.
Yeah, exactly. We are U.S. government. We are trillions, almost $40 trillion, I think, now in debt. So maybe 47, I can't remember. So they're going to come after us. That's just how it is. If you need help, links in the description for Gordon Law. Also CoinLedger, get the free portfolio tracker, and then move on for the reporting. So guys, thanks so much for everything. We appreciate it. And we will see everybody on the next one. Have a good day, everybody. Adios.